Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. We are just 20 seconds away from the durable goods orders from the United States. Great to see everyone here in the room. We are looking at a chart of the US dollar on the 30 minutes, about 5 seconds out. Looking for a print of negative 2.3%. That's off a nice build of 2.2, upwardly revised last month. Survey says a little bit of a delay. On the data here, interestingly enough. Okay, we'll keep this up. This happens sometimes with US data, but it doesn't look like the release has come out just yet. Looks like there is a little bit of a delay here, so we'll leave that up. Here it is, 267 on initial jobless claims, and the data will trickle out shortly. But in the meantime, guys, good to be with you here this morning on Thursday. Today is the 24th of September. Lots of trades in view. We got a lot to cover today, so I'm going to try to keep it as brief as we can, try to get through all these. As always, questions, specific trade setups or pairs you guys are looking at, feel free to throw them on the message board. Dale, Mario, great to see you guys. Yeah, it looks like it's a widespread issue here with the delay on the durable goods orders for today. Seeing a couple of bank wires also suggesting that we are seeing this delay. So we'll see that come out in just a sec, hopefully. Mark, is that a verified number there? He says it's a tweet coming out at negative 2%. Not verified. All right, well, let's see if Bloomberg wants to do their job today. Here it is, down 2%. Yep, verified here on the point. So down 2% as far as durable goods order is a little bit better than expected. Remember, the dollar has been rallying for quite some time, and we are checking now the 12,071 level, which was the reversal day close for the year. And it's still the major resistance that this thing needs to get up into. Near-term support right under the Asia-Pac lows, European lows. 1250 is a soft target, but doesn't look like we'll get too much play on this release. X-transport coming in flat, a little bit weaker than expected. And non-defense, which is a very good gauge of business investment, -2 right on cue, a little bit of a downward revision from that 2.2% print. So no major deviations from the expectation for today's release out of the United States, at least. If anything, you might see a little bit of a softer read here, but nothing to catch the eye. Looking at a quick table of the relative performance so far in this session, you can see that it's a split decision again. Swissy, yen, euro. Obviously, the swing trades are in the yen and the euro positions at this point. Up 0.66 and 0.56% respectively. Interestingly enough, we'll take a look at Kiwi's been holding its own, up 0.3. Sterling, we've been covering that on the scalp side of things for the last couple of days. In focus still, that's at near-term support. Sterling yen also broke support yesterday. And the CAD and Aussie down 0.52, 0.59 respectively. Dale says, Mike, in New York, I'm in New York. How do I get the dollar index on my charts with FXCM? So what you can do, Dale, is you can go to FXCM UK and open a demo account with them. You'll be able to bring up that dollar index. It's a nice, even if you can't trade it, it's a really nice way to being able to gauge just base dollar movements. At its inception, Dale, you've heard this before, but euro, Aussie, sterling, and yen, where the ICE index is very heavily weighted the euro. Okay, in its inception, the dollar index for the Dow Jones FXCM dollar index is was equally weighted with just the 4 major currencies instead of the 6 that you see on the dollar index, which is presented on the ICE. You'll see that on Bloomberg and CNBC and whatnot. So quick note there for Dale. All right, you ready? Let's jump into the scalp charts from last night. First up was sterling dollar and sterling yen. The sterling has been sort of the major focus for me just because of where we came off of. And we talked on it on the Tuesday webinar, guys, about the fact that seasonality for the British pound over the next couple of weeks does point lower. Yeah, and for those of you, again, who may be newer to SB, under long-term charts, you can always see the seasonality effects of all of the majors. And if we go to the British pound one more time, check it out, you can see that heading into the end of November, or the end of October rather, early November, you expect to see some more downside here for the British pound. Same thing on the yen, which is why the sterling yen position may be a very strong move. Also, looking at the dollar yen position that we're trading on the swing side of things does tend to look or matches up with this analog very nicely over the last couple of years. So something to keep in mind here as we take this position. But looking at the British pound, what I wanted to highlight yesterday was this level right here. You had the this is the 88.6, excuse me, retracement. Not a very popular one, but I remember we talked about this in the webinars a couple of months ago. It's a retracement that I've seen catch a lot of rebounds. So 52.18 was the exact low almost that we made yesterday. If you take a sliding parallel for the current operative slope that we're working with, it came in right in that region. Near-term support, momentum testing 40. A downside break, your targets are 51.60 and that median line off the high. So that's a little bit more of a longer-term move. Here's what the intraday scalp looks like. So here was the range that we highlighted in yesterday's piece. We're still broadly holding it. If you took the short based on the trigger, there was a beautiful trigger here in a 5-minute and even on the 30 for the break here. Right about now, I'd be looking to take a little bit off the table, bring your stops to break even, and see if you can get that stretch down to 51.68. I didn't catch this short trigger earlier today, but really nice break, clean break of the European opening range low, gave us a nice downside move. So we're testing support here. The focus range still remains that 52.18 to 52.67 as we head into U.S. trade. But as it stands right now, we are looking for that drop into 51.69, 51.61. That's basically, by the way, guys, this is not a retracement. These are basically just the last two lows that we made, both here in June on the June opening range low and the low that we made for this month. Okay, it gives you 51.61, 51.69, and that's the highlighted region you see down there. The one thing I did want to note yesterday in the piece there is that we've been seeing some ongoing divergence into the lows. The same thing happened with sterling yen, although that broke with a lot more fervor. But these are things to be mindful of. It suggests that downside momentum may be waning, but also a break of them typically is a nice trigger. Now, it just so happens at this point you have really no validation to put your stop against anything concrete. So this is not going to be an operable trigger for us now. That being said, broader focus remains weighted to the downside below 53.20, excuse me, 53.30, and that's going to remain our bearish invalidation level for sterling dollar. Looking at this objectively, one other thing you want to keep in note is your opening range strategies. We made a high on Monday. You'd expect to make a Thursday, Friday low. So I wouldn't be surprised to see if this thing gives a little bit deeper of a push lower here. Any questions on the British pound? Still like the pound yen better, and we'll go over that next. Also, a quick reminder, I say this in every webinar, but I've been getting a couple requests on Twitter for charts that we went over. Keep in mind, guys, you can always click on that camera button, take a freeze or a frame of any of the charts that you see presented here. So do feel free to do that at your leisure. All right, sterling yen. This sucker's been right on point. I mean, here's what the daily looks like first. Okay, again, exacerbated by continued yen strength, and then add to that the sterling weakness, and this is the kind of move that you see, a 186 500 pip, more than 500 pips at this point, down right into the median line dating off of the yearly highs. So not really inclined to take any fresh scalps if you're not already short. At this point, you want to still be very mindful of the U.S. opening range, but if we break below this region, guys, there's really not much on tap. I'll show you the scalp chart in a moment until we look at the monthly low. That's 180.34. Momentum holding that trigger from late last month as resistance. Here's another move below 40 here if we do push lower. Here's what the intraday charts look like, really clean. So from yesterday's setup, focus range, focus support was that 182.86 region as it confluenced with a near-term lower median line parallel off the highs. And the focus still remained to the downside below 85, and you were looking for that nice trigger to give out. Got a little bit of a fake out here with the break. I still would have had that trade in play. Stop against the highs would have been a beautiful scalp. Near-term targets. First of all, that target that we just broke, which was 82.80, and then here's that 81. Well, basically the 82 handle. So if you're not holding any fresh scalps from here, again, you're already too stretched to jump in. If you are, you're looking for that next move into 81.22. Again, that's the 88.6. Remember that the sterling has already run into that 88.6, so it's a nice little move there. Momentum in oversold territory suggests that you still want to be holding on to it. This is not when you want to try to fade the move ever, guys. It's really the break and recovery back above 30. That's the signal for possible recovery. As long as the momentum signature stays sub 30, that's typically when the market has the most fervor. And don't trust me on that. Just look at price action. Of the entire decline, the sharpest part was when momentum was in oversold territory. So again, don't let this fake you out. 181.22, next downside target for sterling yen. The close today is going to be important because if we do pull back and close above this region, I would expect to see some sort of near-term recovery, especially if momentum holds 40 on today's close. If we close below it, again, the propensity for this thing to keep going is definitely going to be on tap. Dan, great to see you in the room, says short sterling yen from 195, my man, and 187. Might be time to take some profit soon. Yeah, I would say so, Dan. Again, from a near-term prospect, I'm focused on the U.S. Open. If the U.S. Open pulls this back above 82, I would definitely be looking to get out. That's 40 pips. I don't know if you want to give that up. But essentially, this is the initial region that you want to take into account. Let's do this, Dan. Let me take a look at a 5-minute chart for you. Where's sterling yen? Here we go. Okay, so if you look at the momentum signature from a near-term prospect, you have 60 hold, 40 break, 60 hold, 40 break, oversold. That still points the way for the downside near term. Watch the U.S. opening range. If you see a trigger break of this, which spans across the entirety of European trade, I would probably look to lighten the load. You have an awesome entry on that, though, so I don't really want to scare you out of that position too much, Dan. Really nice position as far as the entries are concerned. So if you're willing to hold it out, if you see that trigger break, maybe lighten the load. You might get a steeper recovery up towards the 182 handle, or excuse me, former key support, 82.80. That slope resistance, former slope support, might be another region of resistance you'd look to hold the short side. But keep that in mind. Okay, if you see that trigger break, expect the recovery. If you get back above 82.80, I would look to be a little bit more aggressive on shaving that position off. But beautiful entry, Dan. Nice, well done. Cameron, we'll definitely take a look at oil. Let me just get through these setups. Dan says, always sterling yen, trade of the year. Awesome call. Hey, appreciate that, Dan. In fact, the funny thing is, for me, sterling yen was the trade of the year on the long side when we opened up the year. If you guys are reading or if you guys take note of the forecast that we put out on Daily FX, me and Jamie are still write the Daily FX forecast as well. I had a long call for sterling yen for the trade of the year. We were looking for a deep pullback early in the year to get long. We got that, but we failed to break the high with some fervor here. And the recovery to the downside is something I think is a result of the shifts that we're seeing in expectations for monetary policy. I just want to show you a chart of the weekly for sterling yen to put things in perspective. So here's the chart that was posted with that forecast, and we had ended the year just below major key Fibonacci resistance. Nice confluence region there. We got the pullback. Channel support off of the lows from 2012 held, more or less. And this was the break that you really needed to see follow through. Okay, and it didn't. And in fact, if you take a sliding parallel for the operative slope off the lows, we exactly capped the highs. Okay, divergence, weekly divergence into those highs really shifts the momentum to the downside. This is the first break that we've seen sub 50 in momentum on the weekly charts in over 3 years. And these are all things that we want to pay attention to. Okay, so we're back below the 52-week moving average. There's a lot here working with us. Take into account, in addition, what we talked about before, seasonality for dollar yen, seasonality for sterling dollar, and even the seasonality, I'd even go over it, of sterling yen in and of itself is quite bearish as an analog moving into October-November trade. So a quick note of caution there for Dan on that position that you're in. Beautiful entry. Again, just keeping in mind the potential for this move. And again, I appreciate the comments there. So if there are no other questions on sterling yen, we will move right along. Immediate bias stays bearish, sub 82.86. Near-term targets on the short side, 181.22. All right, we are making good time. EuroCAD is next up on tap. This is from the radar charts on last night. It's actually pretty interesting, guys, just a quick heads up. A lot of the scalp charts I've been putting on the radar charts have been the ones I've actually been messing around with, even more so than the intraday. It really just depends on the clarity of the trigger. So it might be on radar, but it could be operable if we come into the areas of support or resistance that we're looking at. Here's what we looked at yesterday with sterling, EuroCAD, excuse me. If you remember the previous day, here's what EuroCAD was doing. And we noted very quickly that, look, it's coming into a huge area of support. 47.17, give or take, was the swing low from August. Okay, it was the open for the month, so it's the monthly open. Basic channel support. Confluence with the lower median line parallel off that same low. So at a nice region of support at the monthly open as momentum is testing 50. That's like a gift. So we were looking higher for a rebound off that play. Here's what it looks like on the daily now. Okay, that level of support held to the T. Momentum, nice rebound ahead of 50, right back at the monthly open, opening range high. So what we talked about yesterday in the webinar is exactly what the focus is right now, and that's one of the cleanest opening ranges for the month that we've seen. Granted, it's the 24th, but that gives you all the more conviction. The longer the opening range takes to be made, or the longer the opening range is sustained or respected, let's say, the more potential the break gives you as far as how far it'll travel. So if we make this move here today and we close above the opening range highs for the month, look for targets at the median line off the low. That takes you as high as 52.20 or so. And then the high day close would be the next target. And the high day close actually comes in at 54.18. Okay, so this is the broader view. Remember, we always do a top-down approach. So this is what the daily charts are saying. Intraday, well, it's been just as beautiful. Here's EuroCAD on the 30-minute. And here's what we look like yesterday. Okay, so we made a 38.2 pullback. Momentum came right into 50. This is exactly where we wrote the note yesterday, saying, look, we're looking higher. Okay, we're looking higher while within, what was the bearish invalidation level? Okay, so basically I didn't note the bearish foundation was above 48. So the 48 region was going to be what would invalidate the long side of the breakout. Remember, this is just a basic trendline resistance off the high, nothing fancy. You saw a nice break of momentum there. It was the first momentum break above 60 for the week. We noted that yesterday. And that shifts the momentum profile near term to the upside. You complete a 618 retracement of the entire decline, a 38.2 of the near term rally, and then you're all triggers from there. Really nice trigger with a stop against the lows, a healthier ATR here at 48 pips. Topside targets 49.42, backed by 150, 150.20, and that's sort of what we sailed through. At this point, you're checking the highs for the month, and this 50% retracement is a little bit of a longer dated retracement from the highs that we made back in August. So you're still probing through resistance here on the open, ahead of the open of US trade. I'd be a little bit more cautious, but At this point, you maintain a bullish or constructive outlook while above that 150 handle. Let me zoom this out real quick, give you some perspective. The next major resistance ahead of the median line, just to highlight this again, is 152. Okay, 151.93 into 152. These are my favorite Fibonacci confluences. 618 off the high with 100% off the low is about as most significant of a Fibonacci confluence as you can get. I've seen some beautiful plays off these types of confluences. So I think you got a clear-cut target. As far as the measured move on the break, that takes you way higher than 52, but the initial scalp target on the move here would essentially be, what is that, 130, 120 pip move to the upside if we're able to maintain this stance above 50, 77, 50, 80. So another trade from the radar charts we've been involved in, and we'll continue to favor the long side. Near term all above 150 on EuroCAD. Just want to really highlight how important it is for today's close, guys. Just because, you know, if you get a wick and a break of the monthly opening range, then a pullback, that's the biggest fake outs you can get. So just make sure that we see the close above it, maintaining a constructive approach above that 150 handle. Any questions on EuroCAD? Again, note that this is an overbought, so I'll look to see if we can squeeze out another entry on this one. Again, most of the triggers, guys, a lot of the triggers have been panning out in Asia trade, or at least the beginnings of the move, the start of the move. So depending on where you are around the globe, guys, at the start of Asia trade, about an hour in, 2 hours in Asia trade, you've been seeing some of the best entries on 80% of the intraday charts we've been putting out this week. I mean, here's one right here. That was the best entry you could have gotten. Mark says that's 4 a.m. here. Yeah, it's tough, man. It's tough. I actually used to work the Asia desk at another brokerage here in the city for a couple of years. That's where I really developed this strategy to begin with. But that was, you know, during the start financial crisis, things were just going nuts. You'd see the U.S. markets really react, and then Asia would open, boom. You know, the delayed reaction, the markets would go nuts. So you'd get some really, really sweet moves. All right, let's move into the next few radar charts, which are going to be the Aussie pairs, coming also off very nicely. Yen strength continuing to exacerbate the Aussie yen decline, but here's what they both look like. Honestly, it's been a while since you've seen a channel like this. Your last channel I saw that was like this, if you guys remember, was Kiwi. You guys remember that? Kiwi was in this ridiculous downside channel for like months. Here it is again, and all we did was we're looking for a downside bias below the 85 handle, which was basically the range highs for U.S. trade. Looking for a break below there to target the lower median line parallel, channel support, and eventually the 83 handle is what we really want to see as a subsequent target here for the downside. So here's what Aussie yen looks like now. Aussie yen. Here's the daily. And again, yesterday we closed right above that median line. We opened up the session for today's candle, pushed up, just failed at 84.40, and then broke right down. If we close below this, you're going to maintain that downside bias. There's a lot of potential here for further downside on Aussie yen. And also keep in mind, it's a good barometer of risk once that starts to kick in again. Heavy markets should support this further to the downside. Let me just snap that trend line. Ah, it snapped. So this is an interesting trend line I've had on here for well, obviously a couple of years at this point. But the point being, I was thinking about cleaning up my charts. I want to see if we're going to see some reaction off it. This is the 2011, 2012 opening range high, and also the 2013 range lows. Pivot on this singular slope. So I know that last month, we kind of sailed through it and recovered real quick on that low day. Here again, we turned just ahead of it. Right now, it's going to come into a near-term confluence with a broader dated 786. I believe this is just a retracement off the lows from 2012. In fact, let's bring this into 764. Okay, we'll choke up that target a little bit, 81.75 on the downside if we do break. But note that trend line. I just wanted to point that out. Real nice pivots as far as those yearly highs and lows that we talked about. So just below that 764 retracement off the 2012 low, and that comes in right around 81.75. Here's what it looks like on the intraday. Okay, so there's that descending channel. We were sitting at support at the 84 handle. Here was the momentum trigger. Finally gave out about a couple hours into Asia trade. Stop against the highs. Initial targets with a move below Aussie yen. Why is there not? Sorry about that. Got to snap those lines again. A break below, and you're going to be looking for that soft target at the lower median line parallel channel support. You got a quick break there, test of the parallels resistance, and here's that move into the 83.05 level. The low for the session so far was 82.98. So near-term support, you have a long trigger in view. You're back from oversold territory, could get a rebound. At this point, you lower the bearish invalidation level. Still going to stay at the 85 handle at this point. Or you know what? I lied. 84. So you want to maintain that bearish buy sub 84, break below the 83 hand. You're looking for 82.50 and 81.85. Remember that the quarter of the daily ATR is only 37 pips here, despite the ranges being a little bit larger. So what that means when that happens, guys, it doesn't necessarily mean that you just completely omit this region. If you hit 37 pips, you just close out the trade. Play the levels. If the momentum signature is continuing to favor the downside, or if there's nothing that's eminently popping out, 37 pips, you might want to shave some off, but the only thing that you want to make sure you do every time you achieve a 37 pip objective is bring in the stop. Bring in the stop. Why? Because even if it goes 37 pips and reverses all the way against you, there's no reason on a scalp or an intraday trade that you should take that loss. If you ever find yourself taking these trades, guys, and you achieve a quarter of the daily ATR, but you don't close the position or you don't move in the stop for some reason, and the market comes back, that's a trade you have to take at break even. Okay, if you don't do that over the longevity of the strategy, you're going to end up taking a hit. Because our objective is 37 pips. Once that's hit, if there's more juice on it, sure, we'll keep something open, but there's no reason that we should be taking a loss on that trade. So just a quick note of caution there. Typically, as soon as we get a quarter ATR, my stops are at break even, if not better. Whether you want to take some off the table and book some profits, that's based on your risk tolerance. No one can tell you what to do with that. For me, typically I'm always going to shave something off, bring stops to break even, and see if we get the extended play. If you get stopped out at break even, no problem. If you still have that bias, look for a new trigger at even a better rate, right? But being stubborn in a strategy like this can really jack you up pretty bad. So keep that in mind. Any questions on Aussie yen? All right. Last but not least, from yesterday's radar charts was the Aussie dollar, and it's basically the same exact setup. Here's what Aussie looks like on the daily. The one thing I just wanted to point out here on the daily real quick, excuse me, is the upper median line parallel for the formation off of those April-May highs. Even if you don't use the formation, but you just use this as a basic trendline resistance, has us testing that former median line as support. And you can see that today's low was almost exactly there. That's not to say you're going to see, a reversal. Okay, I think the Aussie is pretty much making its choice here. Resistance at 60, break below 40 is, a typical hallmark bearish structure. But from a near-term prospect, you do have the risk for a little bit more of a substantiated, I don't want to say recovery, but rebound off this region. Here's what it looks like on the intraday. So there's that trend line that we looked at on the daily chart just now, just beyond the lows that we made, holding that downside or descending channel like the Aussie yen even tighter. You got multiple tests of that support structure, gives you even the more validation. The bearish invalidation level, which was at 70.40 yesterday, essentially gets dropped with that same trend line. So we don't have necessarily a level there. But you're basically looking lower while within this formation. I'm not personally interested in taking any positions on the Aussie, which is why it's on the radar charts. I'm kind of shaded out by the dollar, guys. If you've been looking at the dollar index, this thing, the only saving grace or the only last level of resistance here is that sliding parallel, which is the same as the structure that we've been working off of the lows, and also that reversal day close at 1271 that we just looked at on the intraday charts. Right here. So there's a couple of reasons to suggest that the dollar might come off. Aussie's at support. So I'm not really interested in pressing the short side of the Aussie anymore. More so, if we do see a decent rally, you might offer some nice short entries to jump into on the near term. But as far as the structure is concerned, pretty clean, pretty clean. Now, in the event that you do see a more substantiated rebound here, guys, the first thing you're going to want to do is clear out these levels and just tack on a basic retracement to the lows. That's going to be your guidance for the top side objectives. So again, another slow grinder to the downside, possibly at risk here for a pop higher if the dollar does show us a little bit more of a pullback. All right, so those are the highlighted charts from the intraday side of things. I want to jump into your questions and trade setups that you're looking at. Going across the other dollar majors, guys, dollar yen, swing trades are currently involved on that front. Here's what the dollar yen looks like. So bearish invalidation, remember we talked about it in the webinar yesterday. It was right here at the opening range high for the week. I was just tacking on this structure yesterday to see if we had any guidance as far as this region being another confluence. It was, and it also offered a really nice pivot as far as the break that we saw here last night. So you broke that lower median line parallel, you checked it right back as resistance, and that was the validation for the move lower. At this point, this will give us no guidance. Clean that up. Downside targets, at least from a near-term prospect, you're looking at 119.20. Actually, let me amend that for you. In time, that'll actually match up much nicer with that parallel off the highs. 119.16, 119.15. And then obviously the 50% retracement of the entire advance off the lows that you made for August takes you right into 118.90. So still looks good. Broke the lows, an objective weekly opening range break. Here's your weekly open. You put in a Monday low high. You test the lows, it holds. You test the highs, it fails. Breaks the lows, you're bearish against the highs, looking for a late week low. And that's exactly what's underway here. So looking good. Momentum is at 30. If you see a break below that in the open of U.S. trade with a break of the U.S. opening range, might be a decent entry again. Let's see what the near-term trade looks like for dollar yen. So far, range highs for U.S. trade 119.66, range low 119.37. So not bad, not bad. So here's the London opening range. A quick opening range review for those of you who might be newer to the room. You know, if you look at the first hour, half hour, hour and a half, don't stress time, stress price. Markets will tend to give you a high-low and test one of those high-lows, a range, if you will. The break of that range will give us a near-term directional guidance. So if we look at the start of London trade in green, you set a low, you test the lows, you sit there for about an hour, you move into the highs, it tests the highs. Now the range is set. Once you move back towards the lows, the range is set. If you break the lows, you're bearish against the highs. You look for a late session low. If you break the highs, you're bullish against the lows. You look for a late session high. So really clean break. Here was the opening range low. That was your move. About an hour and a half, almost 2 hours into European trade. Okay, same thing for Asia last night. So here's the Asia opening range. Sydney opens. You want to really wait for Tokyo to give you the initial range here. A little bit messy on the break to the downside, but once you broke, you look for that late session low, and we kind of closed right off the session low here for Tokyo. So use these little pieces and tips and tidbits and price action to help you when you're trading throughout the course of the day for intraday positions. It can be very helpful. Any questions on dollar yen? Mark saying, oh, then I stayed awake for 48 hours straight. Oh, you're talking about 2008 during the crisis? I mean, yeah. Oh, it was a crazy time to be working on a trade desk in the city. I'll tell you that much, Mark. But I guess it's some of my most fondest memories trading in general would be during those times. Dan with a comment says, another great call by Michael holding the Aussie dollar short from 72.50. Cheers on that. Dan, again, you're the one taking the positions, man. They're not my levels, they're the market's levels. I'm just helping you find them. Dale says, Mike, can you look at sterling CAD? Mark also wants to take a look at sterling CAD, so let's take a look at that. Another one. Oh, this was another one. Real ridiculous. This thing held this channel for literally 5 whole months. I mean, geez. You know, you'd think you'd get a breakdown, recovery, test of resistance, and a move that's much sharper than what we're seeing. It's just that, you know, this CAD weakness is holding this thing up. And that's broadly what it is. If you take a look at dollar CAD today, I'm just going to segue real quick. We made the breakout. We made the breakout. Plain, simple, undeniable, unrefutable. It's on its way right up into the median line, which comes in just ahead of this confluence region. We talked about this earlier in the month. 134.57 is such a huge region. It would actually be a region I might actually look to start putting a cap on this thing and trying to press near-term scalps at least to the downside. There's a lot there, okay? You have a long dated key 618 retracement, 134.57. You have the median line of the structure that dates off the lows that we made for, what is that, April, May? Or this is the April, June lows, excuse me. And then you have basic trendline resistance off the highs here. Comes in right around those levels. So look for dollar CAD to show us a little bit more upside here, but it's a clean break of a major key resistance level. Okay, don't want to fight that. Momentum's in overbought territory, and as this thing rallies, that's CAD weakness. So it might keep sterling CAD afloat. I don't want to say it would be bullish, but it might keep it afloat. That being said, you're kind of still in the monthly opening range. You kind of pushed higher here, but it failed. So there's nothing really super compelling here for me, Dale and Mark. On the near term is a whole different story. You can tell the last time I really focused on this pair has been some time. So let me move my marker over here. And let's see what the intraday looks like. Okay. Bear with me one sec, guys. I'm just going to do some quick on the fly here for you. Just want to see if we completed any major retracements with that last pullback. Yeah, we came right into the 618. All right. Here's what I'll say on this one, guys. Near term, the immediate, Mark asking fork, bearish for now. Yeah, the immediate risk, I think, is for a pullback from here. But I do want to show you just a couple of different things I'd be looking at. So the momentum signature was pretty bearish to start off the week. You never saw a 60 break for the entirety of the week. Obviously, you saw that little spike here on Monday. But in general, you saw 60 hold as resistance, multiple dips into oversold territory. This is your first spike into 70. The fact that 70 couldn't get cleared and now we're holding loosely that upper median line parallel, I think does put the initial immediate risk to the downside. But I wouldn't get too aggressive on this, Mark and Dan, until we see a break below that what is that, 202.32 level, the one that we rebounded off of yesterday, basically the opening range low for last month. Could be on a more corrective path, but I just don't think, as far as the stance is concerned, you're ready. Sorry, guys, just bear with me again. Okay, so I'm probably going to be favor working with that slope a little better. One quick note on pitchforks. Markets will very rarely hold pitchforks that are too steep in price for too long. So I'll always default or err on the side of the deader slope or the more the flatter slope, okay, the less sharper slope. So if we take into account intraday price action just from the last couple of weekly highs, you can see a real nice pivot here along the median line. Resistance, 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 messy, support, 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 and here's the break, and we checked that as support. So I would say this, Mark, I would say that your bearish invalidation level still leaves you room into a rally back into 205. And that would sort of be a beautiful region, I think, for this thing to find some resistance that's a little bit more meaningful. But the shift that you're seeing in near-term momentum, certainly for me at least, risks a little bit more of a range action. And we're bearish sterling, don't forget, and we're bearish CAD on the dollar CAD breakout. So don't be too surprised if you see this move laterally for a couple more days. I do favor. I would have to say that the medium term bias still is weighted to the downside. In fact, what was that rally? A 50% off the high? Yeah, just through. Dan, Mark, does that help? Mark says bearish for now on the daily fits. Oh, you're talking about the pitchfork. Yep. Well, soon we will be bearish cat or bullish cat. I agree with you. Yeah. Dollar CAD, if it gets up there, which I'm, again, knowing the bias, guys, is just half of the game. Yeah, we've been bullish dollar CAD. It's all about having a setup, having a position where it makes it, the risk to reward ratio in your favor. So yeah, we're bullish CAD. Rather see if we can see that 34.58 level. It's a juicy level, guys. Dale says, yes, thanks. Mark says, thank you, more than welcome. Mark says, yes, yes, good to see you drawing it near term. So yeah, a lot of times it can help me, Mark, especially if you're looking exclusively at 4-hour and daily charts. Sometimes to pinpoint your entry, just to get when that momentum shift is actually happening, it's a little bit better to zoom in. All right. Another question here from a different Dan saying, what do you think about sterling Kiwi? Let's take a look. So before we do, Dan, if you don't mind, I'm just going to take a quick look at Kiwi dollar. So Kiwi dollar, just in case you guys aren't bored of me saying it, continues to hold the monthly opening range. And you're right, testing the range supports. That's all that's going on here. So some Kiwi strength from here? Sure. Wouldn't be too surprising. That said, should exacerbate, or you'd expect to see it exacerbate in such a scenario, sterling key to the downside. And I think we'll get that today if we finally see. Well, let me take a step back. This is a break of the weekly opening range, plain and simple. If we take a look at sterling dollar or sterling Kiwi on the intraday chart, here is the opening range low and weekly open. Both come in right here. Obviously, again, guys, here I'm going on the fly. I haven't been following this trade, but for Dan's consideration, oops. This is just a basic break of the weekly opening range. So yeah, this would shift your buys to the downside. If we see Kiwi strength today, man, that's a good recipe again. Okay, so could be a really nice play. He says Jamie mentioned it yesterday. Yeah, looks good. He says I'm in at. Mark Haberman says I'm in at 62.48. Mark, what pair is that you're talking about? Oh, Kiwi dollar. I'm sorry. I was looking at sterling Kiwi. I was like, what rate is he talking about? 62.48. Yeah. I mean, range lows, man. Plain and simple. Sometimes it's harder. It's better not to overcomplicate things. You're in a simple range. You're testing the range low. Well done. Yeah. Real nice entry. Real nice entry. I think he took that with you guys in the webinar, yeah? Just a lob up, so really nice. So for Sterling Key, let's go back to that intraday so I can get some levels here for Dale, or I'm sorry, for Dan. So that's the slope I'd be working with for now. If you take a quick look here, resistance, 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 breakthrough, consolidation, approaching support right now off the lows. What we'll want to do, what's this level here? This is nothing. So this is what I'd be looking at. Sorry that took so long, guys. I'm just going off the fly here. This is what I'd be looking at with Sterling CAD. You're coming into an interesting area of confluence right at 205, essentially, or right at 2.5. 240.99 is the exact 100% extension off of, oops, I lied. Sorry about that. Recalculating. Okay, so you got a little bit further down to go. Either way, you're checking that median line off the highs right now. Just below that, what confluences with the weekly low from last week. Again, each of these bars represents a weekly break in price, or the week session rather. So last week's low, the 100% extension comes in pretty close. More importantly, the high day close, I guess the former high day close at, what is that, 239? Yeah, 239.40 from last month, or previous to the August highs. The high day close was right here. What date is this? August 21st. Very rarely do I like using these major swing emotional highs in price for Fibonacci retracements or extensions, but when they line up, they line up. So if you look at this, the 618 is right there at that confluence. I'm going to watch it. I'm not going to stress it. but also the 786 catches that swing low that we made in early September and is also now the September opening range low. So irrespective, we never make an assessment of a major key level just based on it being a Fibonacci level, guys. You can sail through Fibonacci levels like they don't even exist. But when they coincide with a monthly low, um, trendline resistance, longer term moving average, things of this nature, other overlay indicators, then it becomes more technically significant. So these are the levels I'd be looking at. Dan, for you, sorry that took so long, but just for your consideration, these are the levels I'd be looking at. I'd put bearish invalidation level essentially at this confluence. It depends on where it happens in time, obviously, but essentially at this basic confluence, which is trendline resistance, basic trendline resistance off the high, and that trendline support off of the low for September. So I hope that helps, man. Quick run through here on Sterling Key. It matches up pretty well with what we're looking at as far as relative price action in the Sterling and relative price action in the Kiwi. Dan says, awesome, thanks. You're more than welcome, man, anytime. Any other questions or trade setups, feel free to throw them on. The last thing I just want to do real quick is take a look at the euro. We haven't looked at that in the last couple of webinars. It's kind of been out of focus. I've been playing euro more so earlier in the week on the euro yen, which was highlighted in the intraday charts. I kind of lost focus once we came back, tagged this as resistance, and held. Yesterday was where we sort of didn't want to necessarily focus on this anymore because the euro long looked much more appealing. But so did the yen, dollar yen short, and that's euro strength and yen strength, right? So put euro yen out of focus, but looking at euro dollar on the intraday, pretty nice, pretty nice. If you recall, this was on the intraday report. I think it was on Tuesday. I'm not sure which day it was. You can check and see here. But in any event, this was the focal range that was in focus. A downside break. We were looking for a run to 111. This thing stopped. Low was 111.04. And then we finally broke that basic trendline resistance off last week's high. Momentum made the first break back above 60 or 50. We talked about that in the webinar yesterday, I believe. And the basic pivot was a move back above 112.28, 112.08 being the monthly open. And that's the big region of resistance. You had the 200-day moving average at 111.97. You had the monthly open at 112.08. And that was the region that we needed to clear to really favor the long side again. Here we are, near-term resistance back at okay, I knew something got shifted. It's supposed to be at the open, the reversal day close. So 112.93. Shifted on me a second there, sorry. And that would be the reversal day close that we made for the month. So the high day close, also the reversal day close, comes in right there. But looking pretty good, at least for the euro. No changes on that front. And the levels at this point, if you tack on a quick retracement, I haven't really done that just for the sake of keeping the chart a little bit clear. If you tack on a quick retracement, the 618 comes in right at the weekly highs, which comes in right at the upper median line parallel. All of them coincide right around 1324, 1330. So just something to keep in mind here for the euro dollar. Looking good. Cameron, sorry about that. Your view on U.S. oil, I'm short from 45.92. I'm looking to hold it till 43. U.S. oil, my friend, looks like this. Um, Listen, I can't really. How do you take a step back? Oh, 43.50. I'm sorry, I didn't finish reading your post. Yeah, I would choke that up just by a couple of cents. Look at 43.52, 43.58. 50% retracement right off the low. It's also a 236 off the May highs, which was the highs for the year. So nice confluence region right there. We've obviously seen that the monthly opening range low comes in right at 43.19. So, try not to keep your targets, guys, on the extreme. Go ahead and pull them in a little bit. Or always, I don't want to say pull them in, but I always keep them on the inside. So if the support barrier is 43.52, I'll put it at 43.60. If the resistance barrier is 47.20, my limit will be at 47.16, 17. It's always better to put on the inside. So I just want to, first of all, great entry, but I just want to caution you that is a confluence region, and just below that is the actual opening range low for the month. So Cameron, one thing you'd want to just keep in mind here, you're approaching the range lows, so I would hate to see that come back on you over 3 or 4 cents. Dan Norenberg saying Jamie's call on Euro Oz was spot on, long, targeting 56.70, target 161.50. That was easy money and a great call. Great to hear, Dan. And yes, we're back on track. So, sometimes we'll have a nice streak. We just got off a little bit of a rough streak last month, but here we are back on track, guys. And Jamie's been on the ball. Let me tell you. It's good to hear you guys are able to jump on that. Cameron saying, thanks, mate. I will keep this in mind. Yeah, that range is pretty clear. And as you get deeper into time, so into the end of this week, start of next month, the resistance or the opening range high for the month starts to become even more critical as it lines up with that median line and also basic trendline resistance off the 2014 highs. So the range continues for crude. All right. U.S. markets, just heard the bell in the background there. If you didn't, I have to run. If there are no other questions, or if you do have any other questions, feel free to throw them on now. If not, guys, I want to wish you the best of luck into the close of the week. We'll be back on Monday on Daily FX for the public webinar, and then right here on SB Trade Desk for Tuesday, Wednesday, and Thursday normal times. Cameron saying, is it possible to go long at U.S. oil? Are you saying to resistance? I don't know if you mean at resistance. To resistance, which would be back at the range highs. I mean, look, for me, you have a clear-cut play, Cameron. It would be against the opening range low for the month, plain and simple. But, I don't really intraday trade crude. If you get a trigger down there, it might be worth a long position. But remember, as global demand concerns start to wane, as the China story gets worse, and as markets turn over, even if the dollar sells off, the long crude is not going to be an easy play to make, because that means aggregate demand is likely to take a hit too. So Cameron, I don't really intraday trade this, but I would say treat it just as you would any other of the currencies that we find. You're at range support for the month. You see a long side trigger, specifically some divergence into a long side trigger. I would be interested in playing it against the monthly range low. He says, thanks for that. Eileen says, many thanks. See you next week. Have a great rest of yours. Hey, you guys too. Again, we'll pick things up back on Tuesday here. Best of luck trading. Caution to the end of the week. We don't really have any major data. We do have on tap today. Real quick note, guys. Yellen, will be back on the horn talking about monetary policy and the impact of inflation. So if she adds any clarity or any color to either the market's reaction to the last FOMC policy meeting or anything that was noted, since we don't have the minutes yet, you could see some real severe dollar volatility. So just keep that in note. Yellen's on tap later today. Best of luck trading. We'll see you next week, guys. Cheers.